Okay, in this situation or in this video, we're gonna talk about something called risk reward ratio. Okay, a lot of people have been talking to me about, how to get that best risk reward ratio. They don't know it, most especially my followers. Most of you are just beginners. This is why I'm taking this time to make this video for you. At least watch this one and, you know, educate yourself a little bit. Okay, because this video is going to help you to know how to plan your trade and trade your plan the best way. Okay, when we're talking about risk reward ratio, or even when we're talking about entering into the market, okay, the first thing we want to know is where is the direction of that pair. That's what we want to know. When you know the direction, then every other thing makes it very easy. You understand? Now, watch me. What I'm going to do now is there are a couple of two things that I'm going to say. Okay, that analysis should always start from the bigger time frame, if not the biggest time frame. Okay, this is why I went to one of the bigger time frame, which is the weekly. But anyway, it depends on the time frame you are. You can do this on any time frame you like, but what I'm trying to show you here is how to go get the best risk reward ratio. In one of my video, I believe I talk about something like if you see the price, on a kind of high of a chart like this, definitely there's every tendency of it going back down on retracement. Okay, I told you, even your chart you're looking at, it's a Fibonacci on its own. Okay, so how do we now get a good risk reward ratio if we are anticipating that this thing is going to be coming down? Okay, and anywhere you get a signal, whether buy or sell, this strategy applies. Okay, if I'm anticipating that this U30 is going to be coming down, what should I do to get a good risk reward ratio? Come, let me get my Fibonacci tool and just paste it in there for you to see. Look at my Fibonacci, but I believe most of you cannot see the blue figure it has. Yep, cannot change this Fibonacci settings. I don't know why. Okay, let's make it this way. Okay, from what we have seen it like, okay, from the weekly analysis, this thing is gonna be coming down. Okay, and for anything to either be going up or coming down, honestly, it has to break 23.6. That is the Fibonacci. Now let us say, okay, we put a line here that, okay, this is going to be our entry. It has to break 23.6. This is our entry on the weekly. And we know that, okay, when it breaks 23.6, it's coming to 61.8. This is sure. Let's make this one our own take profit exit level on the weekly. And then let us say, because it's a pending order, that we have penned it all the way from here to get out of here, which means if it's going down, then it's broken this and it has gone, right? Then when our own order is activated, let our own stop loss be somewhere on that red. That red is our stop loss. Now, when you look at what I have done, okay, if you see what I have done for my entry to my stop loss, it's a risk of 1. And if you see from the entry to the take profit, it's a ratio reward of 2. So I risk 1 here to go get 2. This is huge. And this is where your own lot size planning comes in. That, okay, if I'm going to pen a sell stop order here to come and get this huge reward, then I need to plan a kind of small tangible lot size that can give me tangible amount of money, okay, and while I am taking care of my risk, that I am risking very small. I am not risking heavy. Okay, now this is our risk reward ratio entry on the weekly bigger time frame. Okay, now let us go back to the daily time frame, which is very small. Okay, as we see, we're going down, then we're going down. Okay, based on the analysis we have done, we are going down. And let's now see it like, okay, how on earth should we be going down, and plan it on all those time frame? We grab our Fibonacci again, we put it on it like this. You said, okay, you see, the daily itself, you know, it's done something here. It broke 23.6 right here. Okay, the daily broke 23.6 right here, and it rallied down to the 100 level. Okay, so which means what? Which means that if this thing is gonna be going down, this daily low is supposed to be broken. So let's say we're gonna put one entry level here. Properties of it is white. Okay, this is our entry on the daily. We have entry on the daily, we have the stop loss over there, and then we have the same take profit level of the weekly, which means what? We have two entries. This is entry number one, this is entry number two, but they are sharing the same take profit. If you look at the two entries and the stop loss level, you will see that we are still risking around 1 to 2. We risk 1 to go get 2. Okay, so let's proceed to the 4-hour time frame, which is a very smaller one. 4 hour. We're going down then. If we have to be going down, what are we gonna do? What are we gonna do? This is where the Fibonacci comes again. From the low to the high. Okay, that is 4 hour, just around the 23.6. Okay, if you take a look at it properly, the 4 hour is just around the 23.6 right here, which means for it to go down, it has to break this 23.6. And from all we have seen, that even if it's breaking 23.6, it will rally to this 61.8. Okay, and for it to go down, it has to break this lower level here. Yes, it has to break this lower level here. Okay, now what we do, what we're gonna do, let's take a white line and put it here. This should be our 4 hour entry level. Okay, that's our 4 hour entry level. Okay, we've done that one. Let us go to the 1 hour itself, and we have seen the 1 hour on its way going down, which means if the 1 hour is going to be going down, it has to break this level here. That is when we believe it's going down. We penned our sell stop order there. Okay, then I'll go down to the 30 minutes, and the 30 minutes is where it's going to end. So if the 30 minutes is going to be going down based on this analysis, then it's going to break this level here for 30 minutes to go down, or all these levels around here, 23.6. Now we got the 23.6 perfect on the 30 minutes. Okay, but let us do it here. But you can do it on the 23.6 because that is the real thing. Have you seen what I've done? Now let us go back to the bigger time frame and go and see what we got weekly. We've seen that those white levels we have drawn, they are Fibonacci entry levels. The white lines we have drawn, they are Fibonacci entry zone. And they are sharing the same stop loss, which is the red line. And they are sharing the same take profit, which means they are all risking around ratio 1. They are risking 1. All of them is going to go get 2. What does this mean? Let me remove the Fibonacci. Delete my Fibonacci. Okay, I want to delete those Fibonacci so that we can see clearly what we have done. Delete. Delete. Okay. Now let's go to the weekly. Now we can see what we have done clearly. Now we see it. Like, look at your entries. Look at your stop loss, what you are risking. It's very small as compared to, look at your entry. Look at all these entries and look at your take profit. It's you are trying to get profit of 2 level and you are risking only 1. The logic here is just to enter your small lot size that can give you tangible amount of money and try to get down here. By the time these candlesticks will leak and collapse, it will activate all this order into profit. That is what that is. That is how to get the biggest pips in the market. We go down to the daily. We see the daily. It's really on its way down if we look at the MACD itself. Go to the 4-hour. The 4-hour is already down MACD and the MACD is going to turn around. And 4-hour will collapse and then collapse and activate all this order here. Okay. You see, when you use your good tiny lot size that can give you a good amount of pips, even the market swing is not even your business anymore. Okay, because you have to know how to allow the market to take a breath and move. Except you want to be struggling with it and want to be losing and blowing your account. See, this is a shape of something that's going to crash down. It's going to crash down. When you penned all your order based on the analysis we have done, all these orders will be activated one by one into profit. So, I hope you understand what we do when we talk about the risk-reward ratio. And thank you for this. Thank you for giving your time to watch this video. Bye.